Hi everyone, this is Rob Witt. My wife and I are, for the first time, looking at buying a house, right? We've settled down, we're living in the Tampa Bay area in Florida, and we've been doing a lot of looking at houses. It's obviously a crazy housing market right now, and I've talked to a lot of friends of mine, a lot of investors, and I've been trying to figure out, is this the right time to buy a house? It's definitely right for us where we are in our life cycle, but I'm trying to figure out, like, is this going to be the right financial decision or not? So I've done a lot of research into this, and for me personally, my answer is yes, and I want to tell you why. So first of all, there's many things to consider. You do have to keep in mind that the U.S. government has printed so much money. Most of the major countries in the planet, and over the past year or so, have printed a lot of money, I should say, more specifically, right? There's a bit of difference there, but I'm not gonna get into it. Regardless, all the indications show that inflation is coming. It has already arrived in certain categories, and it is here. So that is the way it is. The mortgage forbearances is going to be going away soon, and the foreclosure moratorium is going to be going away soon. They're projecting a few months. I don't know the exact details, but I'm thinking with these broad things. So what's that going to mean? So there will be some more foreclosures. There'll be more houses on the market. Is that going to crash the price? Maybe. However, there's going to be a lot more renters as well. So they're going to be coming onto the market, which is another opportunity for investors. So, with all that being said, the most major factor that has an effect on housing prices, besides obviously supply and demand, I mean, that's fundamental economics, is the interest rates. Now, the interest rates have already been going up. They've been going up for a while. Very slowly, they've been creeping up, right, for a few months. Nothing major. I'm talking about mortgage interest rates, right there. The Federal Reserve has made indications that when inflation does arrive, or in their own estimation, not getting into the exact details, but when it does, they will raise their interest rates. Now, when the Federal Reserve interest rates do rise, it will have a cascading effect in the whole market, especially the housing market, which is so dependent on interest rates. One of the main reasons why I want to get into a house right now is because I want to lock in a couple $100,000 loan at a good interest rate, because I know they're going to go up in the future, and I don't want to have to refinance, and I want to get a good deal now, because I know for the next 30 years, I don't know where the rates are going to go. So for us, like, I think that the housing market is always going to be stable. I think that looking at what was occurring in 2008 is not occurring now. I think that borrowers, the people they're giving houses to, is much more stable. I think that they've put in place barriers to prevent the whole Big Short thing from occurring. I do trust in that as much as I do trust the control of the U.S. economy. It's not a fine-tuned machine, right? It is a very, very large and very complex organism. I think is a better word than machine, because it is so complex. But I do trust it's going to be here. I do trust that worst case scenario, the house isn't going to raise in value. Okay, fine, but that's totally fine. Over the past year in my area, house prices went up by 17%. Zillow is projecting an increase of 5% over the next year. I would not be surprised if housing prices do flatline. However, I don't think a massive crash is coming. And even if one did come, I don't think it's going to be anywhere near as severe as the one in 2008. There have been minor dips in the house market since then. There was a little bit one in the summer of 2018 in different markets. I think that's more likely of having a slowdown as we begin, and as housing becomes more unaffordable for the average person. There'll be more and more investors, more opportunity for investors to come in and buy rental properties. And unfortunately, it may mean that the American dream might be somewhat over, or at least heading out, as housing prices continue to rise. The availability of quick cash in the form of loans and so forth becomes harder to acquire. And frankly, as more and more people are moving out of these high population density states into places where I am in Central Florida, I do think that this is an opportunity, and it's not a gold rush, and I don't want to rush into a deal and be desperate for a deal, but I do think that even if things do slow down, like, you can always say, I wish I had bought something 5 years ago. And yeah, if you had bought a house 2 years ago, you would be in the gravy right now. It's true. It doesn't mean that now is a bad time to buy. So I do think that long-term is a sound investment, especially what we're trying to do, which is buy a house and then rent it out and continue to build wealth and equity. That's a whole separate video, which I will get into, but needless to say, that's my verdict of the housing market. The US economy is unstable. Inflation is going to come. I don't think that's anyone's denying that. The Federal Reserve is saying that, there is some inflation coming, and they're ready to raise rates. So that will affect the housing prices. But I don't think now's a bad time to buy. Just make sure you get a good deal. The last thing I'll say, even just from us shopping for houses for the past, we've been loose looking for about a year and really hard looking for about 2 months. I see more houses on the market, and I do think the market is slowing down a bit. It's been such a heavy seller's market, and I think the prices have gone up so high and for so long that more people are beginning to sell. So I do imagine that things are changing. It doesn't mean they're going to be terrible. It just means they're changing. That's all I got to say on that. Thank you very much. I'll see you next time.